Hey, happy Friday, everybody. It's Paul Obrantz with your Friday market update. We are moving our Monday reports to our Fridays. A lot of people have been reaching out saying, hey, I would really like that information before I go look at houses. And I thought to myself, you know what? That's a great idea. So here is your Friday update. Now, there's been a lot of upward pressure on interest rates. We're going to talk about that. We're going to talk about existing home sales, and we're also going to talk about the Fed is just not feeling that inflation is under control. So let's go ahead and let's get started. Let's take a look at this weekend's interest rates. I want you to notice these are the average rates that you're going to see out there. If you notice our rates there in the email or in the comments, I'm not going to brag here, but our rates are just a little bit better than average because that's what we do. That's how we help people save money on their mortgage. If you have any questions on that, reach out. If I don't have you pre-approved, please reach out. I would love to connect and help you and your family save money. Let's take a look at existing home sales. So what you're going to see here is that month over month, sales are down. Year over year, it's down as well, but the median home price has gone up 4.8% year over year. Now, remember, though, that is not a measurement of inflation. Rather, that is just a middle point of half the houses sold above 394, the other half is sold below 394. Really, what that tells me is that the upper market, there's more houses being sold, and that's why you're seeing that upward pressure of median home price. There's 2 months of supply in the market. And it's clear if you're out there looking at homes and visiting and doing open houses, you are definitely seeing more people out there. Spring home buying is kicking off into gear with the rise in first-time home buyers. Yes, the first-time home buyers, they are out there, and jump in home prices sold over listing price. Let's go ahead and break all this down for the month of March. So when you take a look at the month of March for existing home sales, if you take a look right here at 4.3%, I don't know if you can see I don't think you can see it. That's okay. 4.3% month over month to an annualized pace of 4.19 million units. Median home price, we went over that. Inventory is actually up 1.11 units, 4.7 month over month. That's up year over year. There's 3.2 months of supply. Now remember, that indicates that it's a seller's market. A normal market is 4.6. Anything above 4.6 is going to be considered a buyer's market. That means houses are sitting. 33 days on market from 38. And here's what's very interesting. Sold over list price is up 29% from 20%. First-time home buyers are out and they're taking control at 32% of the purchases in March. Cash buyers are actually down 28%. And investors are down 21 from 21% to 15%. Now, that doesn't mean that investors don't think it's a great time to buy. It just means that there's much more first-time home buyers out there taking some more of their share. Here's a quick chart. If you are a charty type person, on the top left is first-time home buyers as a percentage of sales. That is clearly up. Percentages sold above list price is up. All cash deals is down, which is really good. It's helping our first-time home buyers. And offers received per sale is up, which, you guys, here's the deal. If you're out there looking, there's no surprise on what's going on. These numbers do make sense if you take a look at those open houses. But here's really what's driving up rates. We talked a little bit last week about inflation, about employment numbers, etc. This week, Fed Williams says he doesn't feel the urgency to cut interest rates. You guys, inflation is the kryptonite to 30-year fixed rates. The Fed has it set that at 2%, they're going to start cutting short-term rates, which tells the bond market or the 30-year fixed mortgages that, hey, inflation is under control, and they continue pushing it off, saying, you know what? There's no urgency we need to see. And then here's what Powell said, Jerome Powell: the recent data have clearly not given us greater confidence and instead indicate that it is likely to take longer than expected to achieve that confidence. That did not bode well with the market. That's why rates are continually their upward trend as we go into a new week here. Next week is going to be a big week. On Tuesday, we have new home sales. Wednesday, mortgage apps, durable good orders. Thursday, Q1 GDP initial jobless claims. That's huge. And then Friday is the big one. This is the Fed's favorite measurement of inflation. It's personal consumption expenditures. This is the one that's going to be a market mover. And just hold tight. We'll keep you updated. Now, if we're not working together, or if we are, and you need to chat, let's do a hopes and dreams conversation. Now, if you don't know what this is It's a conversation that, by the way, if you're not my client, that we're not going to talk about applications. We're not going to talk about credit pulls. It's just you and me taking advantage of my 20 years of experience. We're going to give you a plan. We're going to make it successful. My passion is to help people just like you and your family buy homes, even in this crazy market, even with where rates are at. There still is expected to have upper single digit appreciation, and great wealth can be created through single digit appreciation. All I need is for you to click on that code. Let's set up a time and let's get a plan in place for you. It's free. It's no obligation. I just want to help. All right, Paulo Brands with your Friday market update. Let me know if you'd like to change. All right, take care. Bye now.